Dear students, welcome to my YouTube channel. In this video, we will discuss about filing of return of income, types of return and uses of the PAN and where it is mandatory to quote the PAN number. So now let's begin the presentation here. So a return in a very simple words to say, it is nothing but a statement of total income or the loss incurred or earned by the assessee here. In other words, to say, the return of income is nothing but a documentation filed with the tax authority which reports the incomes, expenses and other relevant financial position for a particular assessment year. And such return must be submitted by the assessee on or before the due date. In the normal circumstances, an individual and HUF are supposed to submit their return of income on or before 31st July, whereas the rest of the associates such as a partnership firm, LLP, Hindu and company, then AOP, body of individuals, etc., they are supposed to submit their return of income on or before 31st October. The question of submission of return of income arises only when the total income of the person exceeds the non-taxable limit. Now, let's move to the discussion of the various types of returns. Voluntary return. Here, voluntary return is a return which is filed by an individual, Hindu undivided family, association of persons, body of individuals, or any artificial judicial person such as university, etc., shall have to file the return of income on or before the due date if the total income exceeds the non-taxable limit. Suppose if their income is below the non-taxable limit, then there is no question of submission of the return of income. Then the next one comes here, compulsory return of income. Every company or a partnership firm, including a limited liability partnership firm, shall have to file their return of income on or before the due date in respect of the income or the loss. Here there is no question of non-taxable limit. Whatever the income is earned or whatever the loss is incurred by the company or the firm, they must be submitted to the income tax authorities on or before the due date here. Then the next one comes here, return on behalf of the charitable trust. So this is filed under section 139 subsection 4A here. Even the charitable trust has got its own income and expenses. So at the end of the financial year, they are going to arrive at the surplus or the deficit, and the same shall be submitted with the income tax authorities here. Then the return on behalf of a political party here. The chief executive officer of every political party has to file the return of income under section 139 subsection 4B here. So the political party accepts the donations from the various business communities, and it also accepts the membership fees from the party members, and it will also have the amount of the spending. So whatever the surplus or the deficit, it must be submitted with the income tax authorities on or before the due date. Then the next one comes here, return by other persons. Here normally in this type of returns, only the artificial judicial persons, they will go for filing of the return of income. The other persons include scientific research association, universities, hospital, trade unions have to furnish their return of income under section 139 subsection 4C here. Then the return of loss. Always it is not expected that only income will be there. There may be loss also. Even such a loss is to be filed here. Suppose if a person who has loss under the head of profits and gains from business or profession or capital gain or house property and wishes to carry forward of such losses, he should file the return of the loss on or before the due date. If the assessee fails to file the return of the loss, he will not be allowed to carry forward of such a loss. So the Income Tax Act provides the scope for submission even though the assessee has a loss. So when the assessee declares his loss and submits to the income tax authorities, then only he will be allowed, such an assessee will be allowed to carry forward and make set off of the losses against the other heads of incomes. Otherwise, he is not permitted to carry forward such losses here. Then the next one comes here, defective return of income under section 139 subsection 9 here. If the return filed is not fulfilling any of the prescribed conditions as laid down by the Income Tax Act here, the assessing officer may intimate the assessee and give an opportunity to rectify the defect within 15 days from the date of such intimation. Suppose during the course of submission of the income may be either understated, or say the expenses might have been declared as in excess. So in such case, time will be given, enough time will be given to the assessee to rectify his mistakes and resubmit the return of income here. Then the next one comes here, a belated return of income under section 139 subsection 4. A person who has not filed his return of income within the prescribed time allowed to submit the return of income for any previous year at any time before the expiry of 1 year from the end of the relevant assessment year or before the completion of the assessment, whichever is the earlier. Suppose, say for example, if an assessee who has failed to submit the return of income for the assessment year 1920, then he will be allowed to submit the same return of income before the assessment for the assessment year 1920 completes here. So such return is what is called as a belated return of income. Then the next one comes here, revised return of income. Here, if any person who has made omission or any wrong statement in filing of the return of income, a fresh return may be submitted at any time before the assessment is completed or the expiry of 1 year from the end of the relevant year, whichever is earlier. Suppose, say for example, if the assessee has shown or has declared such incomes which is not includable, or if the assessee has omitted to include such income which is assessable under the tax year, so in such case he will be allowed a time to submit the return of income. Such return will be called as revised return of income. Then the next one comes here, electronic filing of return income. Of course, nowadays it will be only e-filing. So it is a mandatory for the assessees who are liable to pay tax under section 44 and the taxpayers to file the return of income electronically. Other taxpayers except the charitable trust which have the option to file the return in paper form or electronic. But almost all today, because of the advent of the technology here, everybody is bound to file the return of income electronically only. Then now let's move to the next slide here, that is these stages in assessment. It's wrongly spelled as states. It is the stages in the assessment. There are 4 stages: filing of return of income, then inquiry before the assessment, computation of the taxable income, then passing of the assessment order. Now let us see these stages one by one here. Filing of return. The assessee has to file the return of income either voluntarily under section 139 subsection 1 or in response to a notice served on him under section 142 or subsection 1 here. Then once the return is filed, such return is scrutinized by the assessing officer. The assessing officer may serve a notice to the assessee under section 142 subsection 1 to produce the books of accounts, the audited the documents, the audited accounts and other necessary information. The purpose here is to not to punish the assessee here, to provide the correctness of the assessment of the income of the assessee here. Then the next stage here is the computation of the taxable income. It is the second stage concerned with the computation of the taxable income and the tax liability. Once the AO, the assessing officer, collects the various documents, the audited statements from the assessee, and then the various documents which are required for the purpose of assessment, he goes for computing the total income and determines the tax liability. He will also determine the interest payable on the basis of the return if there is a delay in filing of the return of income. If any refund is also payable, and he is going to state the amount of the refund payable to such an assessee here. And the last stage here is the passing of the assessment order. This is the final stage in the procedure with the passing of the assessing order and issue notice of demand specifying the sum payable by the assessee or granting of the refund due to the assessee here. So whatever, whether the tax liability is still remaining or any refund has to be made, that will be dealt by the assessing officer here. Then now let's move to the next here. These are the various forms of returns. In case of these forms of returns here, there are 7 forms for the assessment year 2021 here. So the first one here is the ITR1, which is also called as a Sahaj. This is applicable to an individual assessee and the Hindu undivided family who are residents here and whose income does not, here it is the income in the form of salary or maybe pension or the income from other sources, excluding the winnings from the, I mean to say the casual income such as winnings from the horse race, etc., lottery income, etc. here. So this is to be filed only if the exempt income exceeds up to rupees 50 lakhs and agriculture income exceeding rupees 5,000 here. Then the next one comes here ITR2 here, so which is to be filed by an individual and Hindu and HUFs if the total income exceeds rupees 50 lakhs here. Then the ITR3, it is to be filed by the individual, Hindu undivided family and a partner in a firm who has income from proprietary business here. So usually such persons have to file the return of income here. Then in case of ITR4, it is applicable to individual and Hindu undivided family and a firm who have got income from business or profession here. Then ITR5 is to be filed by partnership firm and or a limited liability firm, limited liability partnership firm, irrespective of the level of the income here. Then ITR6 is to be filed by the company and ITR7 is to be filed by the charitable trust here. Then the next one comes a permanent account number. Here it is an exclusive of a particular assessee and he is a permanent identification of the assessee here. This PAN number enables to link with the income tax department. The purpose of issuing the PAN to identify the returns, tax payment challenge and the correspondence received from the assessee. This PAN number link the assessment, tax payment challenge and the correspondence to their assessment records to facilitate quick disposal of their refund or assessment. PAN is having 10 alphanumeric characters and issued in the form of a laminated card here. Then how to read the PAN? Suppose for example, if the PAN number is BFPPK8549K, here the first 3 digits from the left side that indicate a series running from AAA to ZZZ here. Then 4th digit indicates the type of the assessee. If it is now in this example, it is taken as a P means individual, F means a firm, A means association of persons, C means a company like this here. So that will indicate the type of the assessee. If it is a C means company here. Then 5th digit indicates the first letter of the applicant's surname. So here in this case K is the surname of the applicant here. The next 4 digits signify the sequential numbers from 0001 to 9999. The last digit indicates a series from A to Z here. Now, the PAN is mandatory in certain transactions. Here to give some examples here, sale or purchase of any immovable property of rupees 5 lakhs or more. Suppose if the person purchases any land or the house property etc. which is costing more than rupees 5 lakhs, in such case quoting of the PAN is compulsory. And if the person when he deposits rupees 50,000 either the post office or with the bank, then quoting of the PAN number is compulsory. Sale or purchase of motor vehicle of more than 5 lakhs, in such case also quoting of the PAN is compulsory. Then today it has become a mandatory to provide the PAN number for opening of a bank account because your account is linked with the income tax department. So whenever you borrow loan, then immediately if you borrow loan 10 lakh or above, then immediately your name will be sent to the income tax department. Then when a person travel to foreign country with a cost exceeding rupees 25,000, in such case quoting of the PAN is compulsory. Then when you make the payment of the bill or of hotels or restaurants exceeding rupees 25,000, in such case it is compulsory to quote the PAN number. Then even for opening of a demat account through which you go for purchase and sale of the shares, debentures etc., in such case quoting of the PAN is compulsory. Investment, when you make investment of more than rupees 15,000, in such case also quoting of the PAN is compulsory here. So thank you for watching this video. Kindly watch the video till the end, like it, share among your friends and subscribe to the channel. So thank you once again.